Hi, everybody, and welcome to today's webinar. I'm here with Mr. Larry Donahue, who is going to tell us if our business should be accepting cryptocurrency. And I was really excited to hear that he was presenting on this topic because I'm not really even sure that I know what cryptocurrency is. So it should be a great informative webinar. I want to remind everyone to type any of their questions that they have into the Q&A, and he'll pick them up throughout the entire webinar. I also want to remind everyone that the New Mexico Small Business Development Center is strongly encouraging New Mexico small businesses to learn about cybersecurity risk and make sure they are taking action to protect their data, especially from ransomware. Mr. Larry Donahue was with us last week and presented a webinar on how to outmaneuver criminals that is available on demand, pre-recorded. Coming up this week, we have top 10 mistakes hackers want you to make. And next week, we have cybersecurity, a guide for small businesses. So let's learn all about cryptocurrency today with attorney Larry Donahue.
Thank you, Leslie, for that. I appreciate it. And hello, everyone. Before I begin, I just wanted to mention a couple of things, some administrative things before we dive in. One of them is that the New Mexico SBDC has a lot of great resources available. And if you want access to this presentation so that you can get access to the links, you can email or contact them directly, and they'd be happy to give you a copy of the presentation. My name is Larry Donahue. I've been a lawyer for too many years, and I'm also a technology guy, an IT person. So I have a lot of experience with cryptocurrency and mining and all the technologies and issues behind that, and we'll talk about that more in a minute. Before I begin, I want to suggest or recommend that you mute your audio and that you set your Zoom ratio to fit window. And then for questions, feel free to type in questions throughout the presentation. I'm happy to answer them right at the moment as we're going through things, or I might defer some questions to the end, just depending on what makes sense. But I do encourage questions, so please hit me up. So today we're going to be talking about, accepting cryptocurrencies for business. Should your business be accepting cryptocurrency? And in order to answer that question, I think we need to discuss a little bit about what cryptocurrency is and how it works. I think it's really important for you to understand that so that you can understand then how it fits within your business processes, specifically on the sales and fulfillment side of things. So if you're looking for a yes or no from me, you're not going to get it. What I'm going to do is talk about some of the issues around cryptocurrency and how it fits together so that you can then figure out whether it makes sense for you to accept cryptocurrency for your business, and then what sort of steps you might take to make that happen. So I want to warn you, though, that while I'm a lawyer, I'm not your lawyer, and New Mexico SBDC is not a law firm, so they cannot give legal advice. So really, you need to look at this material sort of through the lens of, general advice versus legal advice. And it's really interesting. Any kind of legal advice I'm going to give you that comes out of my lips might vary or depend or be wrong depending on your specific circumstances or where you happen to be living or the other party you're dealing with. So don't take everything I say for granted. With that said, let's talk about cryptocurrency. And I got to tell you, this was really a hard, probably one of the hardest webinars I've had to do, only because there are so many rabbit holes here. The question becomes, how deep should we go? How technical should we assume the viewer is? So at the end of the day, my decision was, we're going to approach this from a business standpoint, trying to understand whether and then how to accept cryptocurrencies as a form of payment for products or services. And I want to apologize ahead of time to, cryptocurrency advocates out there technologists, IT folks who will have a better and deeper understanding about cryptocurrency than what I'm about to talk about. And I just want to say the reason I'm doing that is I'm trying to create a presentation that could, be understandable to the masses. So if you are really trying to have a deep dive into the technical aspects of cryptocurrency, this is not it. We're going to be talking about the business issues. With that said, though, let's begin. The first thing is, what is cryptocurrency? And I bet most people know what this is. That cryptocurrency, such as Bitcoin, they've heard of it. It's a digital or virtual currency that's created, maintained, and transferred using cryptography. And cryptography is, secure or encrypted information. And it's really interesting. When I was fine-tuning my presentation yesterday, as of June 20th, there were almost 11,000 different types of cryptocurrencies available. Bitcoin being the 800-pound gorilla in the space. However, there's many others. Bitcoin in particular equates to about 45%, just under 45% of an otherwise $1.48 trillion market capital or capitalization business. Now it's gone down a little bit today because there's been a dip in the marketplace, but I expect there's going to be further dips and further increases, but it just gives you a general scale of the size of this marketplace. When I first started playing around with cryptocurrency, it was way back in around 2013 or so, and the market cap was ridiculously small. And when I owned a bunch of Bitcoin at the time, and it went up to the crazy price of $600 per Bitcoin. I couldn't believe $600 per, Bitcoin, which was just a virtual, mark on a digital ledger. We're going to talk about that a little bit more. So I couldn't believe it was $600. So I cashed out back then. And of course I was an idiot, right? I shouldn't have done that. I should have held on to, even now today's prices have been ridiculous. But anywho, that's the big thing with, people who have a lot of money and sometimes people who don't. It's making the right timing decisions. And I did not make the right timing decision on that. But what's interesting is that, there are a lot of cryptocurrencies, and it's not just Bitcoin. Interestingly enough, Bitcoin, at least for me, the lawyer, the technologist, isn't that interesting. What's really interesting is Ethereum, which is the number 2 on this list here. And this is sorted by market cap as of June 20th, 2021. And Ethereum at the time, I'm sure it's dipped a little bit because of the recent market adjustment this morning, but is roughly, $250 million. And Ethereum is really interesting to me because it's not just simply a digital asset. It provides what's called, you'll hear language about like Web 3.0. It provides some level of sort of anonymous and digital contracts, interestingly enough. And it's Ethereum that's enabling the NFTs and other technologies you're reading about recently. And I think Ethereum is going to enable a lot of other interesting capability over the next few years. And so that's really what's interesting to me. But as you can see in this list, all kinds of other coins, and this goes on for many, many pages. Like I said, there's roughly almost 13,000 coins. So when we say cryptocurrency, what I'm referring to is all these different coins, all these different tokens, and there's different types of, there's contracts, there's the NFTs I mentioned. The easiest thing to think about right now are the coins, the cryptocurrencies, the Bitcoins, the Ethereums, Dogecoin you may have heard about in the news, the joke coin that's just becoming a ridiculous, market cap. So those are the coins that are most common, and those are the coins that are, I think, most interesting for business. But we're going to discuss that a little bit, and you're going to need to make your own decision. But here is one of the issues, and this is a one-day chart for the portfolio that my firm uses when we accept Bitcoin. And if you look at this, it's almost $1,000 swing within a 24-hour period for the cryptocurrency we happen to have on file at any given time. And so I want you to remember that. And we're going to come back to this towards the end of the presentation and why it creates a challenge for businesses to accept Bitcoin and other cryptocurrencies. But before we can make further decisions on whether we should accept cryptocurrency or not, I think it's important to understand how it works. So we're going to get into a little bit of technical detail here, and I'm just covering the basics. As I mentioned in the beginning of the presentation, this could be quite a rabbit hole depending on where you wanted to go, and then there's different technologies that sort of work on top of this. But this is the basics, and I think it'll give you a rough, good understanding of how cryptocurrency, Bitcoin, Ethereum work in general, at least at a very high level. And it'll help you better understand how it impacts your business if you're going to accept cryptocurrency. So the little icon you see on the left with a B, with the almost looks like a B dollar sign instead of the typical S, you have a B. That is the logo for Bitcoin that you will see everywhere. So what I'm trying to show you here is this is a Bitcoin general ledger. So what is Bitcoin? Well, Bitcoin, at the end of the day, is a public general ledger that you could follow transactions. So you could see that the beginning of time for Bitcoin, there was some initial coin or Bitcoins. BTC is the abbreviation. I will use BTC from now on. BTC was put in the ledger. There were some BTC available. Who owned it? That's in the ledger as well. And then what happened? The initial owner or owners then transferred BTC to others. And so all of that is reflected in the public general ledger. And what's interesting about that is what's to prevent Larry Donahue, the lawyer, from claiming, I own 1,000 BTC right now? The answer is the general ledger. I have to have what's called a public address. That public address I have access to, and if anybody wants to quote unquote send me Bitcoin, they will then have to use my public address to encrypt a certain amount of Bitcoin that only I can decrypt, but it's all in the general ledger. So if I want to claim I have 1,000 Bitcoin, I have to show or prove what public address that is. And then, of course, I have to have access to it through my private key. Otherwise, I'm just a joker blowing smoke in the wind, and it doesn't matter what I claim. It doesn't matter because it's not in the general ledger. So how does that really work? Let's apply it here to, sort of let's put more meat on the bones here. So the first thing you need to know is that who controls the general ledger? The answer is miners. You may have heard this term before, but it's basically computers on the internet that is running a certain type of software, and I'm representing that certain type of software with the cloud. I'm going to show you some other examples of other cryptocurrencies, and they're going to have a different shape. And I'm trying to suggest that it's certain types of software that have to be run by certain types of computers in order to validate and manage the general ledger. And if the miner agrees with a transaction, it will put it in the general ledger. It is the miners that maintain and validate the general ledger. Anybody has access to it, but if a miner doesn't put entries on the general ledger, it doesn't exist. So the digital miners are what's important here, because they will then validate and verify transactions, and they will build on the public general ledger that's available that defines who owns Bitcoin and what the transactions look like. So let's have a hypothetical transaction here. We have the lady on the top wanting to send Bitcoin to the individual on the bottom. How does that work? Well, we got to start with the guy on the bottom. And the reason for that is he needs to share his public key with her so that she can then use her software that she is running on her computer to encrypt the funds she wants to send using his public key. So it's a public-private key mechanism. Anybody has access to the public keys, and you can encrypt information with a public key, but only the individual with the private key can decrypt it. But you have to use the miners to control all of this. So the miners will help verify the transaction based on the public and private keys. So the miners are an indispensable part of the transaction here. So he shares his public key. She uses her private key to access her BTC that she has available in her wallet, which is a piece of software that is running on her computer. And then she encrypts the specific amount of Bitcoin using the public key that he has provided. And the miners do all the encrypting and decrypting and all the hard work associated with validating the transaction and putting it in the public general ledger. Now, do you think the digital miners do that for free? Of course not. They charge. So if the guy number one wanted 100 Bitcoin, the gal number two is going to have to send a little more than 100 Bitcoin for the miners to process the transaction. And guess what? It isn't a set fee. So you could try and do a sneaky one and say, I'm not going to pay any fee at all. And guess what? Miners just aren't going to pick it up. Miners aren't going to do it. And the transaction will just sit there pending forever. What happens if you do a huge transaction fee? The miners are going to pick it up immediately and process it. And so it's a really interesting mechanism here where the miners are going to prioritize which transactions they validate first based on maximizing their revenue or their income associated with the transaction fees. And so you can get yourself into trouble, and I've done that myself, where I'm not exactly sure how much of a transaction fee I'm supposed to include in transaction, and then I underdo it for some reason, and then the transaction just doesn't get picked up by the miners because I didn't put in enough transaction fee for the transaction. So that is, in general, at a super high, simplified view, how Bitcoin works. In order for this to happen, we have to have Bitcoin software running at the miners, running with the individuals, trying to transfer Bitcoin back and forth to each other. So to remind you, it's the miners that verify the legitimacy. And if the miners don't do that, the transaction hasn't happened. It will not be reflected in the public general ledger. So the miners are critical and key here to make this work. So now let's talk about a different cryptocurrency. Instead of Bitcoin, notice the icon on the left here. It's changed. This is what's called Bitcoin Cash. I am now going to talk about a different cryptocurrency. And you have to understand how the different cryptocurrencies work a little bit to understand how it's going to affect you and impact your business. But guess what? It's really kind of the same general high-level process. We have, you have your receiving individual or person. I'm going to call it a wallet. You have your sending individual or person. I'm going to call that a wallet as well. You still have the miners. You have the same general structure here. However, notice I changed the cloud to a different shape. The reason I did that is these miners are running different software to be able to support Bitcoin Cash than Bitcoin. You have to have a different software package for the miners, as well as the sender and receiver have to have different software running on their computer as well. So if you are wanting to transfer and pay with Bitcoin Cash, you would need very specific Bitcoin Cash software on your computer to do so. However, it's still the same process. Number one, the person receiving needs to broadcast or make available their public key so that number two, the person wanting to send them Bitcoin Cash can type in their address, public key, which would then get transferred funds to him. And only he, number one, has his private key that enables him to access those funds that were created with the public key he made available. And again, it's the miners who validate and verify the legitimacy of the cryptocurrency transactions. And when they validate and verify, it goes on the public ledger. So now let's talk about another cryptocurrency. So now we're on cryptocurrency number 3. And now you can see the icon changed on the left. And what is that? That's Ethereum. That's my favorite cryptocurrency, by the way. And it's the number 2 leading cryptocurrency available today. And how does it work? Same thing, same general process. However, notice now I have a different shape for the miners. And you know why by this time, right? It's different software running for the miners. So you think about that for a minute. We talked about 3 different cryptocurrencies, and we have to have 3 different pieces of software, 3 different computers to support those 3 different cryptocurrencies. You can't really share the same software, at least at a miner level, to be able to accomplish this. Furthermore, I changed the graphics for the wallets. Same type of situation here, where you have number 1, receiving, have to make available the public key so that the sending wallet can encrypt using that public key, so that's only accessible by the guy receiving, number 1. But I used different icons here to signify different software again. You, in general, have to have different software for each coin. Now, with that said, there are some software packages out there. Exodus is one that comes to mind immediately, where they've tried to simplify this for you. Instead of you having to install 3 different types of wallets and setups with your computer, Exodus will support a number of different coins. Not all of them, but a number of the popular ones. So in theory, you can use that one Exodus wallet for all of these Bitcoin or these different cryptocurrencies. But Exodus behind the scenes is really installing the different pieces of software necessary to make this work. But otherwise, it's the same general setup. You have the miners that are controlling and validating and verifying the transactions. You have the public general ledger that's available to everybody, and it keeps track over time of who is using the coins, how they're transferring them, distributing, changing ownership, and so on. So this is kind of what we have. And I just was talking about 3 coins. We have 3 different public general ledgers. We have 3 different types of software and miners for the 3 different types of cryptocurrency we're discussing. And remember what I said, we have over 10,000, almost 11,000 types of cryptocurrency. So you could imagine just how much work and effort it would be to be able to have to deal with all of that. So that is one issue factoring in here in terms of what and how to accept cryptocurrency. Now, fortunately, there's some interesting systems and tools available. Specifically, you may have heard of what's called an exchange or a digital payment processor. So what they have done is all the hard work, and they've put in the right software and pieces to be able to manage and communicate with some of the different cryptocurrency. But there's very few exchanges that I've seen that support all cryptocurrency. There's just too many of them out there. They come and go. However, most of the exchanges will support, obviously, Bitcoin, Ethereum, and some of the more popular coins. But for instance, Doge coin, that was very popular this year. One of the main cryptocurrency exchanges didn't accept it, and that was Coinbase. So you had to go use a different exchange or platform to be able to trade on Dogecoin, for example. So you just don't know, what coin is going to be popular when, and whether it's going to be supported with an exchange or digital payment processor you might happen to be working with. So I put on 3 popular exchanges here, and they're also digital payment gateways or processors. They're actually both. PayPal, it's a very new announcement, and I've been a PayPal merchant for a long time, and while I can gain access to PayPal's marketing information about cryptocurrency, I was not able to figure out as a merchant how I can start accepting cryptocurrency through PayPal. So I don't know if that's just I haven't upgraded my account properly, or whether PayPal hasn't fully rolled it out yet, but it's new. On the flip side with PayPal, I think they're gonna make things really easy for people who don't necessarily understand all the technology and the issues behind cryptocurrency. Coinbase is a very popular platform. It went public earlier this year or late last year. I want to say it was earlier this year. And they are an exchange primarily, but they're coming out with merchant account tools that will allow you to integrate them into your business practices. Coin payments is what we use as a firm, and we accept cryptocurrency online. And coin payments has a lot of capability. They integrate with a lot of different shopping carts and systems. The problem is it's not for the faint of heart. You need to be fairly technical in order to use coin payments and integrate it with your systems. With that said, though, they do have some fairly easy, they'll send almost like a PayPal kind of thing. They'll send an invoice or a letter to people. You can control that. It's almost like an online point of sale system that you can use. These exchanges, these digital payment processors kind of sit in the middle of your business, and they sit between you, your customer, but you can't forget about your point of sale or your e-commerce shopping cart. That's a really important component to all of this. So what does all of this mean? Well, you need to decide what cryptocurrencies you might want to accept. You need to find an exchange or digital payment processor that will accept the currencies you want to accept, and they need to be compatible with your point of sale system or your e-commerce shopping cart. Otherwise, you're going to have to hire a technology person to go and integrate and build all of that, which can get very expensive quickly. So this isn't a decision for the faint of heart. Fortunately, Bitcoin is the 800-pound gorilla. Ethereum is next. And so if you just accept those 2 coins by themselves, and everybody accepts those, Coinbase, coin payments, PayPal, most of the others, you're going to be fine. But if you want to accept Doge because you think it's cool and you think that marketplace of people who are into Doge, you want to appeal to them, then you may upset them by accepting Bitcoin and Ethereum, but not accepting Doge. So if you want to accept Doge, I don't believe PayPal accepts it. Also, I think Coinbase just started accepting it. Coin Payments does, but you're going to have to really look around to make sure you have a digital payment processor that will accept it. And then you need to be able to make sure that that will integrate with your point of sale system or your e-commerce shopping cart. So let's ask ourselves, how do you accept cryptocurrency? And the answer is, you need to kind of engineer your solution based on these pieces in the middle between your customer and you. And this is kind of just a general framework to consider. But you have your customer on your left, you have you on your right. Your customer wants to buy a product or service using a cryptocurrency. And how do you turn that into cash for you? Well, you need these pieces at a minimum. First, don't forget about your point of sale system, your e-commerce shopping cart. That needs to be cryptocurrency enabled in order for your customer to be able to pay in cryptocurrency. So that's step number one. And that's not so easy. My firm uses WooCommerce. And so the payment processor, coinpayments.net, that I mentioned in the previous slide, provides a WooCommerce plugin so that I can accept cryptocurrency along with PayPal and credit cards. So it allows people to kind of select which payment method they want, and then they can use cryptocurrency, which would then allow them to pay in the right cryptocurrency that they want. But that took a little bit of work and testing in order for that to work with our setup. Now, coinpayments.net then represents the middle icon here, the exchange or digital payment processor. So when somebody pays in cryptocurrency, remember I talked about wallets when you had people sending and receiving different types of cryptocurrency. Well, the digital payment processor has to have a wallet, a type of software for each type of cryptocurrency that we might accept. And so when somebody pays us in a cryptocurrency, then it needs to go into the right wallet that we own and is maintained by our payment processor in the middle. Now, that's not the end of this analysis though, right? Because if somebody paid me in Bitcoin and I had a e-commerce shopping cart capable of accepting Bitcoin, that then gets put into my wallet for Bitcoin maintained by the digital payment processor. That's still not cash, is it? So somehow I need to convert that Bitcoin into cash and then send it to my bank. So there is a new process that isn't part of our standard operating procedures. It's to go and look at the various wallets, see what different cryptocurrency is there, and then exchange it for dollars and send it to the bank. Once it's in the bank, then it's available for me to use it for payroll or rent. But right now, today, I can't pay payroll in Bitcoin. I can't pay my rent in Bitcoin. So I need to convert it to dollars. But there are some really interesting challenges here that you need to understand. The first one is the IRS has said, when I convert that Bitcoin to anything else, so if I convert one type of cryptocurrency to another, or I convert any kind of cryptocurrency to dollars, that is a taxable event. Now, remember the second or third slide I showed you about the volatility of the cryptocurrencies? They go up and down very quickly within a 24-hour period. So the problem here is, problem number one is when I convert my cryptocurrency to dollars, I now have a taxable event based on what the exchange rate is. So if, for whatever reason, Bitcoin value for the dollar hasn't changed at all, When I convert, then I have no tax liability at all. But if Bitcoin has gone up a little bit between when somebody purchased and when I did a convert to dollars, now I have a tax liability associated with the change in the Bitcoin value between the sale date and time and the conversion date and time. And let's not forget, when our customer buys something, a product or a service, we're still using dollars, aren't we? Almost always. Very rarely does a small business say, this product is 1/100th of a Bitcoin. We don't think like that. We say this product cost $100. Now, if you want to pay in euros or pesos or Bitcoin, we're going to do a conversion. So we're going to say how much Bitcoin to pay to equate to the $100 sale. But that's really an interesting problem, right? Because we have to be able to convert immediately dollars to Bitcoin at the point of sale. And now we have that Bitcoin, and now we're going to convert it back to dollars at some point in the future. It could be minutes, hours, days, but because of the volatility of Bitcoin, it's very likely the price of Bitcoin is going to change between when I made the sale and then when I convert it. And so I got to keep track of all of that, and I got to potentially pay taxes on all of that. The second issue here is your accounting or financial system. Seems like most small businesses use QuickBooks, but this applies to any accounting software you might use. You know, Peachtree, Elite, Xero, they all have the same problem. And the problem number one is, do they support cryptocurrencies? As of this date and time, it's my understanding that none of them do, although I know there's been some discussion about it. Now, what does support cryptocurrencies mean? Well, where does the data go? When do you put data into your accounting system? If you're like us, my law firm, we do quite a bit of transactions on a daily basis. Those transactions have to go into the accounting system on a daily basis. So we are taking data from our e-commerce system, converting it, and putting it into QuickBooks. So that is a problem for us, isn't it? Because if somebody pays in a cryptocurrency, that cryptocurrency is the denomination we're using for the sale, not dollars. Bitcoin, in my example here, or another cryptocurrency. So how do we account for that properly when it goes into QuickBooks? Now, one way to do it is to say, well, when we made the sale, we knew the exchange rate between Bitcoin and dollars was this. So when we put everything into QuickBooks, we're not going to tell QuickBooks about Bitcoin at all. We're going to tell it about dollars using the conversion process. And so we have to write special software to do that. But if we do it that way, note that Bitcoin goes to the exchange where we do the conversion to dollars. So that number isn't going to be the same as what we told QuickBooks because we put our data in back at the e-commerce shopping cart level versus the exchange level. So there's going to be a disagreement between what our shopping cart says and what the bank says. And so we have to monitor that and manage that very carefully. Vice versa, you don't have to do it that way. You can put data in at the conversion level. However, you have to take into account you did a conversion and what is your tax liability there, and you got to keep track of that some other way. So either way, this is a little problematic for most small businesses, and you have to engineer this before you dive in and you just start accepting cryptocurrencies, or you're going to create a really big headache for yourself. The other issue you need to be aware of is the conversion information needs to go into QuickBooks as well. And it has not been my experience that any of the exchanges or the digital payment processors have great data that's importable into QuickBooks. It's been difficult for us. And specifically, we have a lot of different transactions and they tie to various customers and order numbers. And so getting that data through so that we can tie transactions and conversions and dollars and Bitcoin amounts to the right order and customer is difficult. It's been taking some very specific programs we've had to write in order for this to work for us. So that is something that you have to keep in mind when you're thinking about accepting Bitcoin and how that's going to work on the back end for you. So this brings us to the big question, should you accept cryptocurrency or not? And the answer for me is, it depends on your business. It depends on what you need for your business. So let's talk about what are the arguments for acceptance of Bitcoin. Well, one is, there's a large and growing marketplace of cryptocurrency customers. And so is that a market that you can tap into and appeal to? Because I don't have a lot of data to prove this. This is just anecdotally, but it appears that cryptocurrency users tend to choose merchants who accept cryptocurrency over those who don't. And we've seen that happen quite frequently, actually. And there's, within the market of cryptocurrency users in general, there are subcategories of different people who favor different types of coins. Doge, Ethereum, Bitcoin, Bitcoin Cash, others. And so ZEC or Zcash is one actually we're getting a lot of. And so it's not just appealing to the cryptocurrency folks in general, but specific cryptocurrencies. And if you think there's a market there, and if you think you can appeal to those folks, then it may be something that you should consider and accept cryptocurrency for. The other thing is, just in general, accepting cryptocurrency is going to help move the cryptocurrency market forward. It is, I think it's in everybody's interest to help the market mature and move forward. And the way to do that is to get more businesses accepting cryptocurrency. So that is, some of the arguments on the reasons why you should accept cryptocurrency. The problem is there are some pretty significant arguments against accepting cryptocurrency. And before I jump into these, I want to tell you I'm very much pro cryptocurrency. I am a miner myself. I've been involved in cryptocurrency for years. We accept cryptocurrency. I'm not trying to attack cryptocurrency or the marketplace. I'm just trying to make sure small businesses have an understanding of what the issues are before you jump in with both feet. You need to think through these issues. And frankly, I think the cryptocurrency world has more work to do in order to gain more acceptance. With that said, here are some of the arguments against accepting cryptocurrency. One, most point of sale systems don't accept it. So, if you're a restaurant and you're using a restaurant-based point of sale system, how are you going to accept cryptocurrency if your point of sale system doesn't accept it? Are you going to have two different point of sale systems? Are you going to abandon the one you're using for an esoteric one that may accept cryptocurrency? I mean, this is a big issue here. And then if you are an e-commerce company and you accept sales over the internet, you have an e-commerce shopping cart. And so you have to then integrate the digital capability to accept cryptocurrency into your shopping cart. And guess what? Not all shopping carts accept cryptocurrency. Not all digital exchanges that provide software to accept cryptocurrency will work with all shopping carts. So you're going to have to really investigate that. And what you don't want are 2 shopping carts on your website. That's not going to work. You need to have one shopping cart that supports all the payment methods. And the more payment methods you have, arguably, the easier it is to do business with you and the more of an appeal that you might have for selling your products or services. Another argument against this is the accounting nightmare. And I mentioned the issue with QuickBooks. It doesn't have an ability to track cryptocurrency. So that means you're going to have the right reports and processes prior to putting your data into QuickBooks to be able to appropriately keep track of everything. And for me, the lawyer, we have very specific legal rules for us lawyers on taking money from people. Specifically, that money needs to go into a trust account. I can't put cryptocurrency in a trust account. I can only put dollars in a trust account. So I have to convert and I have to keep track of the conversions. And guess what? If I convert and the value of cryptocurrency is dropped between when we were paid and when the money gets moved into the trust account, I have to cough that up. And not only that, if cryptocurrency goes up in value, I don't get to keep that. I got to put that in trust as well. So I kind of get hit both ways there, but that's just because of my specific licensing rules as an attorney. Other lawyers, you're going to have the same issue. Other businesses, even licensed professionals, probably not, unless maybe you're in banking or doing something as a financial advisor. That's a whole nother ball game that we're not going to get into. But I can't dismiss the difficulty and issues associated with QuickBooks. You really need to think about that, especially if you have a lot of transactions. And I think this next bullet here is going to make some sense to you if you were paying attention to what I said. And that is when you convert, somebody pays you, and then you convert it to dollars, put it in your bank account. What happens when there's a refund? How does that work? Especially if the value of the dollar to the cryptocurrency has changed significantly from when the purchase occurred. It could get awkward, especially with, excuse me, a lot of market volatility, excuse me. You're going to have to evaluate the issues and figure out how to handle refunds and credits when you're dealing with cryptocurrency. And for my company, what we have decided was simply, if we're going to do a refund or a credit, we are going to refund in the exact amount of the cryptocurrency. So if they paid us, I'm making up numbers here, 10 Bitcoin, which is outrageous sum, it'd never be that high. Let's say 1 Bitcoin, we would refund them the 1 Bitcoin back. But if they want a credit, then the credit would be subject to the ebbs and flows of the fluctuation of value between Bitcoin and the dollar. So that is something else you have to think about and factor in. And then finally, this is the big problem that I've encountered time and time again. Transaction fees can be significantly greater than you might be used to with credit cards. So when you accept a credit card, you're used to paying the quote unquote discount rate to your merchant account provider. Consider the merchant account provider in a similar role as the miners I had talked about. So transaction fees can be fairly high and fairly significant, depending on the type of coin, depending on the marketplace circumstances, and just seems like random factors. And I've seen, for example, Ethereum transactions, just to transfer some Ethereum from person A to us to pay for a service, the transaction fees have been as high as $30 or more, which is, I think, outrageous when you consider the credit card discount rates. Now, to be fair to cryptocurrency, it's getting better and it's becoming more predictable, but it still fluctuates and it's still expensive. And that could be a big problem, especially when you think about, you don't just pay one time, you pay twice, maybe 3 times. And what do I mean by that? Well, there's a payment from the customer to you. Then there's if you convert, right? You take your Bitcoin and convert it to $1. Well, an exchange is going to do that, and they don't do that for free. They also want their, you know, pound of flesh, so to speak. They want their transaction fees. So you're going to pay transaction fees there. And then finally, some exchanges are going to charge you a fee to transfer money to your bank. So that could be a third hit on a transaction fee. And that stuff adds up over time. So if you're running a very low margin business, cryptocurrency may not be the right thing for you now, or you need to operate in cryptocurrency and not be converting and transferring often, and minimize that so that you don't have as much overhead associated with all the transactions. So, should you accept cryptocurrency or should you not? Hard to give a yes/no answer from my position. You have to evaluate these issues and the complexity of your business and your POS system, your point of sale system, and your shopping cart to determine whether it's fairly straightforward or not. And if it's not straightforward, do you guys have the technical capability in-house to make it happen? And then you have the same issue on the accounting side. So you really got to analyze these pieces, in my opinion, before you can make this decision. But then once you do, you go to one of the exchanges and you implement and integrate the technologies, get the reports that you need, and run some test cases. And then it could be a very rewarding thing for you once you have all the pieces in place. So with that said, we got about 9 minutes left. We're going to open it up to questions. I don't think we're going to get a lot of questions this time around. I don't know if there's anything else, Leslie, you want me to mention before we close.
Okay, let's talk about cryptocurrency. So do you have any predictions? And I know I'm talking to an attorney, so I understand, but do you see this as becoming more mainstream for small businesses to explore? I know there's a lot of stuff that comes out on the news, a lot of people are interested in it, but what do you see this industry in the next year to 5 years? Is it something worth exploring, or is this something that small businesses basically should stay away from at this point? I know you said yes or no, it depends and all that, but any predictions?
Well, yeah, I think it's going to continue to evolve and improve and become more relevant for small business. Absolutely. And I'll give you a couple of quick examples. And as I was listening to you talk, I just thought of another advantage to cryptocurrency that I should have put on my slide. And that is, you can't do a chargeback. Once people pay, there's no way to do a chargeback. So for some businesses, that's, advantageous. But cryptocurrency, when you looked at just Bitcoin, it really was it was almost like packets of rice, or even worse than that, slips of paper. It's not a real thing. It doesn't do anything other than just keep track of this virtual thing called a Bitcoin. That's changed, however. There's a whole new set of technology where the cryptocurrency is moving based on the fundamental technology of cryptography. And what we're talking about is, you can Google this, it's called Web 3.0, and it involves smart contracts, digital contracts, where you can contract with somebody else in an anonymous, public way and derive value or services or products. And NFTs are an example of this that have just recently exploded. And I think NFTs, paying $1 million for a digital image, I'm struggling with that myself personally. But I could see where that would have a lot of value if maybe it's not a digital piece of art, but it is a deed to property, or something that has more sort of umph to it, more value tied to something tangible in the real world. And so I do see smart contracts, digital contracts going to become more and more important. And I think, we're going to see, for instance, a lot of products and services we provide as small businesses rely on other vendors. For instance, some people use Amazon for not just selling, but fulfillment. And you can imagine where Amazon would adopt digital contracts. So all of this, the payment mechanisms, as well as what is specifically being ordered and requested of Amazon, is all handled through digital processes. And I do see that for the future for us. And so as a product, or as a merchant selling products or services, we may be using digital contracts and services engaging with others using this kind of technology. So this isn't going away.
So we had talked about, and the big topic right now is cybersecurity. So do you see any advantages to cryptocurrency over other forms of, you're talking about digital contracts and so forth. Do you see advantages as it relates to cybersecurity?
Yes and no.
Okay.
If you know what you're doing and you have the technical ability to know how to, for instance, archive your wallet, then yes, digital currencies, cryptocurrencies can potentially be much more secure than other forms of payment or cash. You think of the proverbial cash underneath the mattress, which is great until the house burns down. The digital currencies provide a lot more security, but the laws haven't caught up. So if your credit card gets hacked, you have statutory provisions to protect you from that. You can issue the chargeback. It's called contingent liability, 6 months. So you have up to 6 months to protect yourself against illegal transactions using your credit card. You don't have that level of protection in the crypto world. So if you don't have the ability to maintain security, you don't have the ability to keep your software up to the latest and greatest and make offline archives of your information, your wallets, then cryptocurrency is only going to be as strong as you are in your ability to support your security. So it's a double-edged sword here, interestingly.
I wonder if, now I get a lot of requests, especially from the kids. They love it for Venmo. They want me to Venmo over them, and it's just a quick way of transferring money. Do you see something like these different ways that people have of transferring money and stuff to really embrace something like a Bitcoin on that platform?
Oh yeah, I've heard of talk of Venmo supporting certain types of cryptocurrencies. I don't know where it's at right now, but there are other digital wallets like that that'll run on a mobile device or iPhone and or an Android, where you can pass around Dogecoin and other forms of digital payments just as easy as you can with Venmo. So yeah, that's happening already.
So interesting and such an in-depth topic. I was all confused, and I have not dabbled in Bitcoin. I shouldn't say dabble, but I haven't done anything with Bitcoin yet or any of the other cryptocurrencies, because I know it's not just all Bitcoin. But I think it's a topic that's going to gain a lot of traction into the future, and I look forward to learning more about it. With that, you have any last words, Larry, before we pop off?
No, I appreciate anybody's time getting through this.
Awesome. Thanks again, Mr. Larry Donahue, for telling us about cryptocurrency. We have all kinds of webinars coming up throughout the next couple weeks, the next couple months. So I encourage everyone to visit nmsbdc.org to keep up to date on all the latest webinars. If you'd like any no-cost confidential counseling, again, visit our website and we'll be glad to connect you with one of your local centers. So with that, you guys have a great day. Bye.
Thank you.